Hi, I'm Paul Guppy with the Washington Policy Center, and this is our regular weekly update of what's going on in the state legislature, where they are working with bills that will affect the lives of everybody in our state. First, let me mention briefly that please like, share, and subscribe to our YouTube channel. We have an expanding audience. We're trying to reach more people as possible with direct communication. And also, as strong free speech advocates, we love comments. So if you want to leave a comment, complimentary, criticism, whatever you like, leave a comment, and we like reading through those. Now to the update. What I'm going to look at today is some bills that have died, bad bills that would have imposed new taxes. Those look like they're off the table. The Democrats have a proposed budget in the House and the Senate. The Republicans have also put in a budget, and I'll describe some of that. There's a tax increase in the offing being debated. And also a couple of items at the end about repeal, possibly, of a popularly passed initiative, and then a local issue that's going on in King County with Constantine taking a lucrative new job. So I'll wrap up with that. But first, let me get to some bills that have been debated in the legislature through this session and did not make it out of committee. So it looks like those bills are dead for the session. And that is good news for the people of our state. And here's why. The first one is SB 1764. That bill would have required a mandatory increase in the minimum wage up to $25 an hour by the year 2032 and indexed it to inflation at 2% or more, which again, that's like building inflation into the economy. But the main thing that a high minimum wage does is cut people out of the job market, particularly teens, young workers, low-income workers. It's very hard to find a job when the government has priced you out of the labor market. So avoiding a high minimum wage creates more job opportunities for people across the state. The next bill that died is HB 1320. This was a Democrat proposal to increase B&O taxes across the board in all categories of business, anywhere from a 0.02% rate increase to 0.05. And I know those numbers don't seem very big, but if you run a business, state taxes are imposed on the gross income of that business, no deductions, and therefore it is a big hit. It's a gross profits tax. Or not profits, but just operating cost. In any case, the proponents of that bill, and I love to check out the language of people who are promoting these ideas, because they won't just come out and say, we want to raise your taxes because we want more money. That's too obvious. They always need a story. So this bill was promoted as modifying tax rates in a way that would benefit Washingtonians. And right there, you see that they're putting a spin on. Whenever you hear change or modify in the world of taxes, that means an increase. So there's an interpretation there. The next bill was HB 1702. This would have created a brand new utility tax at the county level. So there's already local, city, town utility taxes. This would have allowed an additional unit of government to impose taxes on utility bills. And this is another tactic that's used in government, where government slices and dices at different levels, and then each level, each district imposes a tax all on the same people. I've heard this described as a taxpayer starts to feel like the single zebra that's being divided up among a pride of lions. So at each tax seems like not that much, but then they're all added together, and that ends up to be a big burden. And the other bill that went down, thank goodness, is SB 5754, and this is a perennial favorite. Senator Hasagawa introduces this bill every session, and that is to create a state bank. Washington Policy has done a lot of analysis on this. I have testified against the bill in committee, and here's why. There is only one state bank in the entire country, and that's in North Dakota. It's very limited, and I guess it works for them. The problem with a state bank is that it would compete against its government competing against its own citizens. But the main thing it would do is give out loans to other units of government and then charge interest for those loans. So government would be lending money to itself, charging itself interests, and it would be taxpayers who would have to bear that cost. And thank goodness this idea has gone down. Once again, I have no doubt that Senator Hasagawa will introduce it in the next session again, and we'll see what happens. And with that, I'll move on to the tax proposals that are being put forward. So the Democrats have the majority in the House and the Senate, and each side has introduced their own tax package. The House and the Senate have different versions. The House has about $15 billion in new taxes. The Senate has $17 billion roughly in new taxes. A lot of this is driven by pay raises going to state workers. That would add about $4 billion to costs, and also more money for K-12 education. What's interesting about that is that public sector workers already have among the highest salaries in the state. Public sector workers have higher median salaries than most people who live in 38 of 39 counties. That is to say, the public sector is paying more than the median salary in those counties. King County is the only one that's an exception. In K-12, we are now spending more money than ever, $20,000 per student or more in some cases. And yet test scores are going down, families are leaving the system. The results that we're getting out of public education do not match the resources that are being put in. And yet for the upcoming budget, both the House and the Senate are proposing putting even more money into public education without actually creating better results, better academic outcome for students. There are a whole raft of other taxes that are being proposed. I've touched on some of these in the past. And there's one example is HB 1763, which would impose a new tax on short-term rentals. You can think of this as the Airbnb tax. So this is a case of where people in government look across society and private sector and they see economic activities going on and they ask themselves, why aren't we getting a cut of that? You know, we need to tax this successful businesses. And now Airbnbs and other rentals is what they're going after. They're also looking at repealing the property tax cap. They want to impose a wealth tax. I will compliment Governor Ferguson. He has expressed opposition to a wealth tax, supposedly a tax on the rich. The Democrats say that the people who propose this tax, rather, say that the rich should pay their fair share. And I always become suspicious when I hear language of that, like that, because they never define what fair share is. It's a constantly moving standard, and it always results in more taxes, more money going to the government. This idea is being pushed in the legislature, and we'll see if Governor Ferguson maintains his opposition or whether he's willing to accept that. What a wealth tax does is drive investment out of the state. It also causes high wealth individuals to move out of the state, as Jeff Bezos already has done. I wouldn't be surprised if Bill Gates changes his residence at some point, because this comes on top of the capital gains tax that the legislature just passed in the last few years. It all adds up to a hostile business environment in Washington state. Instead of being cutting edge, innovative, and entrepreneurial, it becomes expensive, lots of taxes, lots of regulations, very hard to run a business or even to live in the state, and therefore high wealth people move out. And I think Governor Ferguson sees that, and he's trying to preserve some good business climate in our state. Another example that's out there is SB 5794, and this is a bill to repeal a whole range of tax exemptions. 20 tax exemptions would be repealed under this bill. Again, you always have to look at the language of the supporters. They say that these tax exemptions are inefficient and outdated. Well, you know what? If you have one of the tax exemptions, I don't think you feel that way about it. Again, it's just another way of raising more money from people who are not paying right now. I wouldn't call a tax exemption that's working, been in place for years, outdated. It's functioning the way that the government wants it to. There's a gas tax increase being debated. The House and the Senate also have their own transportation packages being proposed. Transportation is funded through a separate budget. And the House side, for example, is proposing a 9-cent a gallon increase in the gas tax and then indexing it to inflation. So that would add to the current state tax of 49.4 cents on top of the 18 cents that we pay for the federal government. You add all those together, and we would have one of the highest gas taxes in the country. We are already fourth behind California and New York in paying gas taxes. This would make it even more. I've noticed that each time the gas tax is increased, we're promised this will take care of maintenance backlogs. It will have safe roads and streets. We'll be able to expand highways. And yet that transportation capacity never grows as much as the traveling public needs. And we end up with traffic jams and for roads anyway. So we seem to be paying more and getting less, and that's the pattern that we're seeing in transportation. Those two bills will be debated in both the House and the Senate, as I mentioned, and then reconciled later on. A few other examples of tax and fee increases that I looked up were at least 7 tax increases in the transportation bill. One is to increase the electric vehicle fee from $225 a year to $275 a year. Some of that makes sense because electric vehicle owners don't pay the gas tax, so this makes up for that. But it would also double the rental car tax up to 11.9%. It would impose a 10% tax on e-bikes. It would impose tolls on all of Highway 520, not just the floating bridge, but the entire highway. And all of those, of course, are to raise revenue for the transportation budget. But like education, we seem to get less efficiency the more money you put into it. So reviewing how that's done would be a good idea by the legislature. Some sort of insider information that we're picking up in the legislature from our ubiquitous clandestine sources who talk to us is that there is some growing tension between our new governor, who again has done some fresh thinking. He's open to new ideas, and the sort of old-fashioned way that the Democrat caucus is operating. There have been some symbolic things happening. For example, the House has now banned the governor's staff from being in the wings of the chamber where it's easy to talk to the members. Pressure from some senators caused the governor to fire, well, one of his top aides resigned, I'll put it that way, under pressure. And another kind of symbolic thing is that when I've attended hearings, and if there are agency representatives there from the executive branch, they are usually called on first or early on as a courtesy. This session, that was reversed. Democratic chairman called on Governor Ferguson's representatives last in the hearings. That seemed to send a signal that they were trying to put the governor in his place. What all this adds up to is that if they're not able to reconcile the budget before the 105-day session is over, we will end up going into a special session. The legislature has done a good job in not holding down taxes. They've passed plenty of taxes, but they have passed their budget on time. And I think they want to avoid the embarrassment of a special session. That tradition could be broken this year. It's possible that the Democrats in the legislature want to show Governor Ferguson that they really are in charge. This could lead to tensions that stretch beyond the April adjournment date. We could be into early summer before the legislature finishes up its work. We'll see how that goes. And just to show how what's possible is the Republicans have put out their own budget, which includes an 8% increase in state spending. It funds all current services, all caseloads, plus growth, and it does all of that within existing rising revenues. The Republicans are proposing a full budget with no tax increases at all. So we find that to be encouraging. We hope that the Democrats will at least listen to that message and think about not increasing the financial burden that they're placing on the public. And with that, I'll shift to two closing items. One is a disappointing result from a King County judge, Sandra Widlin, her name is. She just issued a ruling all on her own that repeals Initiative 2066. So this is a blow to direct democracy. Voters passed this initiative in order to preserve access to natural gas service to maintain appliances and home heating provided by natural gas. That's what the voters wanted, and this single judge has just thrown that out. Now, this is going to the appeals court and possibly to the state Supreme Court, so we'll see how that flushes out. But what I notice is, what's the point of voting on something if a judge just turns around and throws it out? So I think that shows a lack of respect for the public. She did it on kind of vague technical grounds. It covers too many topics. The voters were confused. And again, I think that shows a lack of respect for the voters by saying they don't know what they're doing when they clearly passed this initiative and made a democratic decision. The last item is, as someone who grew up in the Northwest and has been very proud of this area, one thing that's been disappointing to me is the gradual erosion of our reputation for having clean, honest government. And that just took another hit yesterday when Sound Transit hired Dow Constantine as its CEO. So this is an insider hire. Dow Constantine appointed most of the members of the Sound Transit board. He's going to receive a salary of $450,000 a year, almost $1 million over a mandatory 2-year contract. Even if he's only on the job for a week, he'll still get $1 million no matter what. So this really looks like insider elite machine politics. It reminds me of how the Northwest used to say, well, we're not like those corrupt New Jersey, East Coast, Boston, Chicago politics. You know, we don't do that here. We have clean, upfront government. It's honest. And yet there's a pattern of elites taking care of themselves, and this Sound Transit hire looks like the latest example of that. And be sure to catch me on Tuesday, April 8th. I will be on Washington Policy Center's On the Go program in a segment that our communications staff is calling Ask Paul Anything. I'm a little intimidated by that, but it'll be fun. And if you have a question, please send it in to comms@washingtonpolicy.org. That's COMMS at washingtonpolicy.org. Send an email with your question, and I will respond to it on the show. And with that, I'll wrap up and be ready with an update next time. Thanks for watching.